What's up, everyone? It's Scotty with MoneyVest. So markets here are very flat on the day, even though intraday we did see a little bit of an uptrend and the markets here recovering from what we had a little bit of a pre-market sell-off to now, of course, closing back higher to near all-time highs again. The last 3 to 4 days, we have really seen and witnessed a lot of volume coming back into the markets, more specifically concentrated towards the top 7 stocks in the markets as well. And that's exactly what we're here to discuss, because since 1964, so right now 2024 minus 1964, for the first time in 60 years, we're seeing the highest level of concentration for the S&P 500. I'm going to go over some charts and go over some data points that are going to really be very interesting for all of you. So hope you all enjoy this video and find it helpful. Make sure that you drop a like, and of course, don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course, getting access to all the members-only private videos, including all the trade alerts and trade ideas and options alerts, as well as getting early access to the MoneyVest beta platform, beta launch that we're having in the first week of July. And this is a special pricing at a 51% discount. So I kid you not, over time, as we are adding more functionality, more tools, and more features, and more data sets, pricing is going to go up. But if you want to lock this pricing in forever and become a part of our community and have access to everything, all access to the entire platform, the website, the data, the macro dashboard eventually, which is going to come online, a lot of tools, there is a 51% discount. And on top of that, you can also get another 16% annual discount if you do sign up annually. So that's almost a 67% off, and that pricing is going to be locked for you forever. And this right here, of course, is just a little bit of an overview of what that software looks like. So you can plot a lot of different charts, a lot of different graphs, visualize a lot of the income statement, balance sheet, cash flow items on these charts here. And then, of course, there's also going to be something called the MoneyVest metrics that we are working on. We have already developed this, and these are 70 to 80 metrics that I look at for every company that you can also analyze very quickly. It's going to streamline the whole process. It's going to give you some remarks and some checks on what I feel for that company in terms of growth, profitability. We've got efficiency, we've got financial table, and valuations as well. So there's a lot of interesting things. Macro dashboard is going to be added over time. We've got calculators for the discounted cash flow and discounted earnings multiple models. So you yourself can calculate the intrinsic value for a lot of individual stocks. So link's going to be down below, limited time. We'd love to have you on board. If you have any questions, please feel free to reach out. So we did have the JOLTS numbers coming out today. So job openings came out at 8.059 million. So really shocker. And coming in at under 8.1 million. So if I plug this number into our spreadsheet, so let's just go ahead and plug this 059 and we hit enter, you'll notice that now the ratio is sitting at 1.24, which is the job openings with the unemployed persons ratio. This number has really come down, and in the previous numbers, as you'll notice, that this was actually at 8.3, so 8.355. So if I plug that number in, so 8.355. At the time, it was sitting at 1.28, almost 1.29. And of course, and now we're sitting at 8.059, closer to 1.23, 1.24. So this number has been softening. It has been coming down quite significantly. So the numbers of job openings in the U.S. sank in April to a more than a 3-year low of 8.1 million, or 8.059 to be precise. And another sign the labor market is cooling off as the economy is slowing down. So there's not as many job openings as there were, of course, during the height of the pandemic at a record 12 million job openings back in 2022, and now are at the lowest level since early 2021. And job listings are still higher than before the pandemic. They're tracking at just under 7 million, and many openings are never actually filled. But the trend in job postings provides clues about the health of the labor market and the broader economy as well. And the number of people quitting jobs, meanwhile, rose slightly to 3.5 million from a 3-year low of 3.4 million in the prior month as well. And the number of job openings for each unemployed worker slipped to 1.24, as we just discussed, and we just looked at in the spreadsheet, from 1.3 in March. And the ratio is down from a peak of 2 in 2022 and even higher at 2.5 in 2021 as well. So this is a big unemployment week, so make sure that you do tune in to our live stream on Friday, where we are going to be taking a look at the unemployment situation. We'll go over the unemployment rate, the job openings, all that good stuff is going to be discussed here on the live stream on this channel. So make sure that you hit that subscribe button and, of course, hit that notification bell as well, so you get notified when we're going live. But very important market forces at play because, as we already know, the inflation is one of the leading indicators for the Federal Reserve, but interest rates are also going to be dependent on where the unemployment situation is. It's not just about inflation, it's also going to be about the labor market and how well or poorly is the labor market doing. Now, Tom Lee, as we already know, the biggest bull on Wall Street, is now expecting the S&P 500 to go as much as 5,500 by the end of the month. And they basically mentioned overall a very important macro week for stocks. While markets might initially negatively react to good news, meaning stocks might fall on a better than expected economic data point, we would buy those dips. We remain constructive on stocks in June, and these are the reasons to be constructive on stocks near term, which we discussed recently. The 5 supports or catalysts for the month of June. First, high probability June is a positive month, so there's a seasonality trend there. Second, favorable inflation data point. So this again is still unknown. June 12th is when inflation numbers come out. It's the same day when the FOMC also takes place. Third, low utilization of leverage measured by NYSE margin data. So lots of people are not really taking into account leverage. So there's a more stable, more smarter use of leverage or margin debt according to NYSE. Fourth, $6 trillion and growing cash on the sidelines. So there's a significant amount of cash pipeline. That's pretty much been stagnant across the board. So if you come over to our spreadsheet, so this right here is going to be the other spreadsheet that we have. Let me just bring that over. It's going to be over here. And we also keep track of total, money market funds and assets that are in the money market funds. And you'll notice it's been sitting at closer to $6 trillion. And that is 4.5 times above the median read over the last several 30 or 40 plus years for total money market funds. You'll notice a very, very significant growth here, 5.9, almost $6 trillion. So yes, there's a lot of money sitting on the sidelines, so that's pretty constant. Fifth, persistent pessimism on markets and the U.S. consumer. Sixth, EPS season shows AI spending and transformation still strong. Now, of all the reasons here listed for a 5,500 S&P, I really just think there's only 2 that make more sense because one would be the seasonal chart. June is usually a positive month for the S&P 500, so that's number 1 here. Inflation data points, I mean, we don't really know what inflation is going to look like. However, I would argue that yes, there is value or weight in that analysis because oil prices have been coming down, and there is a possibility that inflation comes in a little bit better than what the expectations are, thereby increasing the probability for reduction in interest rates. Then, of course, the market's taking that as a very positive catalyst to push higher. Utilization of leverage has also been lower. I'm not really sure if that's a catalyst in itself to push stocks higher, to have more liquidity come in. Fourth, this has been constant, so it can be a catalyst for almost every month. And persistent pessimism on the markets and U.S. consumer is also not a good enough reason, in my opinion, for the markets to, of course, push higher. But, of course, they can. Anything can really happen. I do think that sixth, EPS shows AI spending transformation still strong. So this right here could be another very strong reason for why this could be a bullish month for the markets. And seasonal median gain of 3.9% is correct. S&P could possibly touch 5,500 during the month. We will stick with what is working as well. This right here is from Mike Zaccardi. Since the great financial crisis, the S&P 500 has witnessed a 6-time increase in the frequency of notable fragility events compared to 80 years prior. And what this essentially means is that markets are more volatile to a lot of different market environments than 80 years prior, in the past. So what you'll notice is that since great financial crisis, we've seen a lot more events related to markets, being volatile, being more fluctuating. Volatility has been a little bit more, eventful. It's been back and forth compared to the prior 80 years. And we've only really witnessed, 1, 2, 3, 4, 5, 6, and 7 in those 80-year period. And we've already experienced 6 in a span of 14 years or so. Right? So, or about 16 years or so. So that just goes to show how much liquidity, how much volume, how much the involvement of 0DTE options, high frequency trading. It's just been, the markets are in a whole different ball game now because they're sensitive. They're very sensitive to very, very minute, intricate data points. And as a result, there's more volatility, there's more fluctuation, there's more fragility in the markets that are not as stable as they used to be in the 80 years prior. And this right here is the chart of the day. The S&P 500 is most concentrated since 1964, and something that we really should pay attention to because this is the concentration of the 4 largest stocks in the S&P 500. And you'll notice in 1964 there was over a 24.6% concentration, that was in 1964. Concentration between AT&T, General Motors, ExxonMobil, and IBM. So these four companies made up for over 24.6%. And right now, the current top five as of May 31st, 2024, we got Microsoft, Apple, Nvidia, and Alphabet. I don't know why it says top five, but really these top four, we're sitting at 23.62%. So just about a 1 percentage point lower than what we witnessed back in 1964. So we are pretty much on par with what we have already seen about 60 years ago. So definitely something to keep in mind because, a concentration risk is real. The narrower the breadth, the more risky it becomes because it's like we're all putting our eggs in one basket, and that basket is these 4 or 5 companies because they really are the ones that are controlling the direction of the S&P, the momentum of the S&P, the sentiment of the S&P, and of course, if there's any type of pullbacks or corrections or dips or negative sentiment around these companies, then that's, just kind of a recipe for trouble and for markets to come down. So concentration risk is high, and we're seeing a lot of momentum on the back of these companies. So extreme concentration risk in the market. The top 5 companies market cap is a percentage of the S&P 500 currently at 27%. When you also include for Amazon as part of that list, it's now sitting at 27%. So almost a third of the S&P 500 is in these 5 companies. So basically what that means is 1% of the S&P 500 controls 30%, 27% of the S&P 500. I'll say that again. 1% of the S&P 500 controls 27% of the S&P 500. Just think about that for a second. In terms of influence, right? Absolutely crazy. 5 companies out of the 500 make up for almost a third of the S&P 500 in terms of market value and influence. So, of course, those are the usual suspects. We got Amazon, Google, Meta, Apple, Microsoft, Nvidia, all of them pushing higher. Tesla's down about 30%. This is on a year-to-date basis. So, year-to-date basis, of course, most of big tech and FANG stocks are up except for Apple, which is surprisingly flat, only up about almost 1% here. Adobe's down year-to-date. Adobe, I feel like, is coming down to some very attractive levels. I've done videos on Adobe, and I will be doing a couple more updates on Adobe very soon. And Tesla here down almost 30%, of course, on a year-to-date basis as well. Microsoft, Nvidia, Amazon, Google, Apple, Meta, all pushing higher, just more or less flat on the day. AMD was down a little bit over 2%. And then we did have a bit of a split day on the market. So again, these 11 sectors kind of back and forth in the last 1 week. Also, real estate, healthcare, defense was pushing higher with technology, energy, materials selling off. And in the last 1 month, we had technology, comp services, healthcare, defense was pushing higher with industrial materials and cyclicals and energy selling off. Natural gas a little bit higher. Coffee prices, oats, cotton, palladium, silver, soybean, all pushing up with rough rice, cocoa prices, lean hogs, and orange juice selling off as well. Bitcoin back over 71,000 and Ether just over 3,800 as well. So coming back over to the markets here. So let me just go back. Talking first about volatility. So we are back down to 13. And this again is the spreadsheet that we have discussed in our previous videos. Volatility summary, we're looking at 13.16. That's exactly where we are. And we are in the 19th percentile and a normal rating for the volatility at the moment. So keep this in mind because every time we come down to, let's say, sub 12 or sub 11, we're going to be working in the single digit percentiles, and it's going to be extremely rare for the markets to be in that zone. And I think that's exactly why it's important to keep in mind how low the volatility goes down to, and it's going to be a time for us to be more cautious and be more aware that the risk reward is not that favorable. And resistance, there's not really any resistance, but really levels that we're watching that it's going to become very, very nice buying opportunity for us, and it's going to be anywhere between 18 to 24 to as much as 36 to 40. Again, the higher it goes, the better it becomes for us as investors to dollar cost average into. Crude oil prices with a huge gap down. We discussed this in our live stream as well. Selling off down to $72, $73 a barrel. Lots of consolidation here inside this green rectangle and that area of support at the moment. And of course, we got a huge resistance and a target's back up to $81, $83 per share, per barrel, for crude oil at the moment. But this could actually help with inflation numbers in future reads, considering that a lot of the things are indirectly or directly affected with where gas prices and oil prices eventually go. Bitcoin here, once again, rotating back higher from that support of 67,000. So back over 71K. And this right here is pretty much the all-time high. And of course, the resistance to keep in mind at around $72,000, $73,000 for Bitcoin. And Ether also pushing up to over 3,800. So a lot of consolidation sideways. Support level is going to stay put at 36.67. And of course, resistance and targets back up to 4,100 for Ether as well. Coming over to the MoneyVest index, so we are seeing a little bit of consolidation on the day, 3.62. Obviously, it did sell off on April 20th. That was a much better, decent buying opportunity. And then we rallied back up to as much as 4, and then we rolled right back down to 3.4. And right now, we're just consolidating in that range. But as I said before, as I've mentioned this in my previous videos, a much better buying opportunity for us. Risk reward is going to be very favorable in and around 3 to as much as 2.4 to as much as 1.5 for S&P 500 as well. So keep those levels in check and in mind for your future analysis and where I would be personally buying and dollar cost averaging in the markets. So coming back over to the S&P 500, so we are pretty much trading at all-time highs, almost at all-time highs, and resistance and targets still going to be at closer to 5,300. We did see a little bit of a dip in the S&P, so this right here was a reasonable dip from highs of 53.43 down about 2.8, almost 3%, but that dip very fairly quickly got bought up here, up 2% since those lows, and 5,500 is going to put us roughly at around 4% upside for this month. That's where Tom Lee basically sees the S&P 500 going, so that's going to be a new all-time high and about a 4% upside from these current levels. Of course, time will tell if that happens, but this is a huge resistance we need to break out of at over 5,300 for the S&P 500. Talking about the NASDAQ, and NASDAQ here also just consolidating sideways, validated that support here inside this green rectangle and that area of supply, excuse me, area of demand at 16,450. We did see a reasonable pullback of about 3.5%, close to 4%, and then of course rotating back higher with now a resistance sitting at roughly 17,000 points on the NASDAQ as well. So those right there are going to be some levels to keep in mind. Talking about Apple, and Apple here trading pretty much at all-time highs, almost at around 194, 195 inside this sort of red rectangle. This trade idea is now fully officially over, considering that we did rally very nicely from that tier 1 support. It took us time to get going, but when we finally did, pushing up 18, almost 19, 20%. We talked about how the RSI was oversold. We talked about the MACD, the L3 banker oscillator, that signal. I specifically mentioned that investors are buying up this stock. Institutional investors are accumulating in and around those range when it was consolidating sideways for a very long time. And of course, a very nice move to the upside of close to 18 to 20% for Apple as well. Amazon, on the other hand, pushing higher from that higher low. So this right here continues to be a strong support, as well as a horizontal support at 171 with a resistance and a targets back up to 188, 189 for Amazon as well. Talking about Tesla. And Tesla here still consolidating sideways. Volume is really, really low, so we're not really seeing a lot of sort of momentum, and resistance going to be all the way up to 190 to as much as $210 per share for Tesla, with a support here inside this green rectangle sitting roughly at 145 to 153 for Tesla as well. So a lot of consolidation sideways in that range for Tesla. Talking a little bit about PayPal, and PayPal here on the day, again, down about 20 basis points. Resistance is going to stay put roughly at $65, so that is going to be that level to keep in mind. Support level close to $56, $57. Lots of consolidation here inside this green rectangle, which again is an area of demand, area of support for PayPal as well. And resistance and targets all the way back up to $68 to as much as $70 per share for PayPal. Talking about Visa, and Visa here consolidating sideways. So again, we're seeing a lot of sideways action here. Resistance is going to stay up roughly at 282. Support level close to 266 for Visa as well. So a lot of consolidation here in that range. I do like Visa as a company. I will be doing a video and updated analysis on Visa very soon, but we're seeing a lot of consolidation here for Visa at the moment, with the support level sitting put at 266. Talking about NVIDIA now. So NVIDIA on the day pushing up to new all-time highs, 1164, up another 1.25%. So absolutely incredible prior to the stock split that takes place on June 10th. So of course, there's this preconceived notion that stock splits are a positive catalyst, and for that reason the sentiment continues to be very strong, and we're seeing new all-time highs for NVIDIA. Very, very overbought, so of course caution is advised here, considering how much it's rallied and trading over 33, 34 times sales at the moment. But again, a huge congratulations, and premiums I'm sure are going to be stupid high for NVIDIA at the moment. Advanced Micro Devices are selling off a little bit, so this is going to be the support at around 160s, 161. Of course, starting to break down a little bit, and that next support is going to be inside this green rectangle between 145 and 151 for AMD as well. So a lot of consolidation sideways here for AMD, and resistance all the way up to 182, 183 for AMD as well. Talking about Meta platforms, and Meta here starting to consolidate again, just trading inside this green rectangle. A lot of sideways action here for Meta, and resistance and target's going to be back up to 520s, 531. And again, a lot of consolidation here in that range for Meta. Support level is going to stay put at 387 for the company as well. Talking about Netflix, and Netflix here also starting to pull back a little bit from its highs of 664. Again, RSI coming down, MACD's crossing below the signal line as well. L3 banker oscillator also starting to show some signs of a pullback, and next support really is going to be aligned with this higher low, as well as this support here, 596, close to $600 per share for Netflix as well. Talking about Google, and Google here also starting to consolidate here. Support level is going to stay put at 174. A lot of these companies, you'll notice the volume is really, really low, and they are pretty much trading at near all-time highs or at all-time highs, and they continue to be very, very strong in terms of where they are placed at the moment. It's not like they're rallying harder every day, except for Nvidia. Every other stock here is really just kind of up there trading at all-time highs, but we're not seeing a lot of volume or momentum at the moment. So there's really not a lot that we can analyze at the moment because volumes are really low. I mean, for example, Google, 14 million, right? 14 million shares traded versus average 21 million. So really low volumes. Again, Tesla is even more bad, 60 million compared to 90 million average 30-day volume here. So, it's not even making, 60-70% of its way there. Then if you take a look at Apple here, Apple's volume was also low, 47 compared to 58 million. So it's a really, really low volume sort of days right now. Microsoft, for example, pushing higher, resistance going to stay put at 417, and support, massive support and area of demand sitting roughly here at 393, 394, 14 million compared to 19 million shares traded on 30-day average basis. Meta also seeing oh my God, Meta's like 50%. What the heck is going on here? Volume for Meta was 7 million compared to 17 million on a 30-day average basis. Wow, these are some really, really low volume levels. For advanced micro devices, sold off a bit, so I'm assuming it was still pretty decent. Yeah, 48 million compared to 50 million. And Netflix here, on the other hand, seeing 3 million compared to 3.29 million. But again, volumes are really low for a lot of these companies. And then finally, we come over to Enphase. Enphase consolidating sideways. Again, really low volume, 3 million compared to 4.35 million on 30-day average. So huge resistance and a triple top resistance at close to 138. Massive support here in the low 100s. And then finally, we come over to Costco. Costco here pushing up to almost new all-time highs. Volume's pretty decent, on par with the 30-day average. And of course, pushing higher here. It continues to be very, very overbought. So I do believe Costco is coming in strong with a bit of a pullback here fairly soon. It's not a question of if, it's a question of when that's going to happen. So hope you all enjoyed this video and a complete update on the markets. Make sure that you drop a like, subscribe to the channel, and let us know down in the comment section below, what do you think about the current market environment? Do you agree with Tom Lee's analysis of pushing up to 550, 500, 4% upside? Or are you more cautious and more aware that risk rewards may not be as favorable as before, and wait for better and better opportunities, let the prices come to you, and wait for discounts as well? So let us know in the comment section down below. As always, make sure that you drop a like, subscribe to the channel, and don't forget to join our Discord and our Patreon with that 51% special pricing with the MoneyVest beta launch happening in the first week of July. That pricing is going to be locked for you forever, and you'll have access to the entire platform available. And then we're going to be adding more tools, more functionality, more features over time as well. So as always, happy investing. I'll see you all in the next video.